All right, let's break down what was a truly wild week for the US stock market. We're going to cover everything that happened from Monday, September 22nd, all the way through Friday, September 26th, 2025. I mean, this week had it all. We saw record highs, we got a pretty stern warning from the Fed, and it all wrapped up with a whole lot of uncertainty. So let's just dive right into this roller coaster ride. The market absolutely blasted off to new heights to start the week, only to get slammed by some pretty sobering comments midweek. Then, it managed to claw its way back for a really tense finish. It was just a classic mix of euphoria, fear, and a nail-biting conclusion. So, how did all this excitement get started? Well, the week kicked off with an absolute bang on Monday, and it was all thanks to one of the biggest deals in the history of the tech world. That's the number that just electrified Wall Street, $100 billion. This was the potential price tag on a new strategic partnership between NVIDIA and OpenAI, all focused on building out these massive AI data centers. This news all by itself just poured jet fuel on the AI rally and sent this huge wave of optimism through the entire market. And the impact was immediate. You saw the three major stock indexes hit all-time highs for a third day in a row. NVIDIA, of course, surged, but even Apple jumped on optimism for its next iPhone. And get this, with that final push, every single one of the Magnificent Seven tech stocks was officially in the green for the year. This really created this powerful, almost unstoppable feeling of momentum. But you know how it goes. Just as everyone was getting the party started on Tuesday, the music just screeched to a halt. The Federal Reserve Chair Jerome Powell stepped up and delivered a major reality check. It really doesn't get more blunt than this. He said, quote, "The stock market is fairly high valued." I mean, that's not some hidden code. It's a direct warning from the most powerful person in finance. That one sentence basically hit the emergency brake on the rally and immediately sparked fears of an AI-fueled bubble. Powell's comment really amplified a worry that had kind of been whispered about on Wall Street, this idea of circular funding. Here's the concern. A company like NVIDIA invests billions in a customer, say OpenAI. OpenAI then turns right around and uses that exact same money to buy NVIDIA's chips. So it looks like amazing organic demand. But it could just be the industry funding itself in a big loop, which, feels a little too much like the dot-com era for comfort. So after that jolt from the Fed, the rest of the week was just a complete tug-of-war. We had all this conflicting economic data pulling the market in different directions, and it created a ton of confusion. It really put a spotlight on the stories of individual companies. Just look at these mixed signals. On one hand, you have some great news. GDP growth for the second quarter was revised up to a really strong 3.8%. But on the other hand, a key manufacturing report fell off a cliff, unemployment claims suggested the job market is cooling, and all the drama in Washington meant fears of a government shutdown were getting very real. This kind of chaotic backdrop really created some clear winners and losers. So let's look at 5 key stocks that kind of tell the story of the week. Starting with, of course, NVIDIA, the absolute center of all the drama, swinging between the high of that OpenAI deal and the anxiety of those bubble concerns. Now, while NVIDIA was grabbing all the headlines, other chip makers were making moves. Intel, for example, had a huge Thursday, jumping almost 9%. This was on reports that it was looking for partnerships with giants like Apple and TSMC, which gave investors a lot of hope that a real comeback story might be in the works. But the AI story wasn't a winner for everybody. Take Oracle. They got hammered, dropping 5% after a research firm put out a really negative sell report. It basically questioned their cloud growth and raised some red flags about their debt. It's a good reminder that not everyone is riding the same wave here. And the turbulence wasn't just about company earnings. Politics played a huge part. Amazon dropped 3% after the Trump administration announced plans to hike H-1B visa fees. Since Amazon hires a ton of foreign tech workers, the market immediately started pricing in those higher costs. And it wasn't just big tech. Over in the electric vehicle space, Tesla hit a speed bump. The stock fell over 4% after new data showed a big 20% drop in their European sales for August. That's a pretty clear sign that competition over there is getting really intense. So, after all that chaos, everything was riding on Friday morning. The market was basically holding its breath, just desperately looking for a piece of good news. And you know what? It got it from one of the most important economic reports we get. The report was the Personal Consumption Expenditures Index, or PCE. All you need to know is that it's the Fed's favorite way to measure inflation. And on Friday, it came in perfectly. exactly as expected. Not too hot, not too cold. And that was just a huge sigh of relief for investors because it calmed down fears of runaway inflation and kept the hope for future interest rate cuts alive. So this left the market in a really strange position, caught between two powerful competing stories. On one side, you've got this perfect Goldilocks scenario. The economy's strong, inflation is cooling, and maybe we'll get rate cuts. But on the other side, there's this huge wall of risk, a possible government shutdown, new trade tariffs, and those fears of an AI bubble just won't go away. The market is just stuck right in the middle. So, with these two powerful forces pulling in opposite directions, you're probably asking, okay, so what do I do now? How should an investor even think about the next move? Well, it seems like three main strategies are taking shape. First is the bullish AI play. You bet the momentum continues, and you use any weakness as a chance to buy. The second option is to rotate. Move into areas like energy or industrials that do well in a strong economy, but don't have all the AI hype. And then there's a third path, the defensive crouch. You hedge against all the risk by moving into safer things, like gold or consumer staples. But here's the deal. No matter which of those you choose, there are two huge risks hanging over everything. The first one is just pure political uncertainty. A government shutdown or new tariffs could throw a wrench in the works at any moment. And the second risk is this disconnect between the market, which is hoping for a bunch of rate cuts, and the Fed, which is being much more cautious. If the Fed disappoints the market, watch out. So when you look back at the week, it really just lays out the central conflict in the market perfectly. The biggest positive takeaway? The raw, undeniable power of the AI story to push stocks to incredible new highs. And the biggest negative? A sharp reminder from both the Fed and Washington that the foundation of this rally might be a lot shakier than it looks. It leaves us with the one big question that's going to define the coming months. Which of these powerful forces is going to win?